Today we are going to see the concept of double entry. This topic is very important for students of grade 10. So this is a foundation in accounting. It is important to know the concept of double entry properly so that in future the students will not get problem in understanding the topic that will come afterwards. Now, the concept of double entry states that if one account is debited, the other account will have to be credited. We always debit items which come into the business and we credit items which go out from the business. So it is very easy to understand the concept of double entry. You just have to see which item is coming into the business, we have to debit, and which item is going out from the business, we have to credit. We just have to use this logic, then we can do the double entry. For example, purchase goods for cash $18,000. So purchase goods for cash $18,000. What is coming into the business? Goods. What is going out from the business? Cash. So we debit whatever comes into the business, but we don't have goods account, we debit purchases. And then what is going out from the business? Cash. We credit cash account. Very easy. Now, sold goods for cash $8,000. What is coming into the business? Cash. What is going out from the business? Goods. So item coming into the business we have to debit. So in this case we debit the cash account. What is going out from the business? Goods. Therefore we credit, but we don't have goods account. We credit sales. Purchase motor van for cash. So what is coming into the business? Motor van. What is going out from the business? Cash. Therefore debit motor van, credit cash. Purchase equipment for cash $15,000. What is coming into the business? Equipment. What is going out from the business? Cash. Therefore we debit equipment, credit cash. Now, so far concerning the concept of double entry, once an account is known, that is, if we know the debit, then the credit comes automatically. For example, purchase goods on credit from MBC $8,000. So what we are receiving? We are receiving goods. What is going out? There is no money going out in this transaction. So what is coming into the business? Goods. Therefore we debit. We don't have goods account. We debit purchases, and the other accounts come automatically. We credit MBC account. Purchase building on credit from ABC. Purchase building on credit from ABC. So what we are receiving? Building. So we debit building, automatically we credit the ABC account. Now, receive cash from XYZ. What we obtain in cash, therefore debit cash when we credit XYZ. Paid cash to suppliers. What is going out? Cash, credit cash, debit suppliers. So if one account is known, the other one comes automatically. Now, sales normally have credit balance. Purchases, debit balance. Receipts, debit. Payments, credit. So by the words also, you can know the double entry easily. For example, if I say purchase, so what comes into your mind? Debit. And if I mention cash, therefore credit cash. If I mention check, credit bank. If it is on credit, then we credit the name of the person. Sales, what comes into your mind? Say credit. Therefore credit sales, the other ones comes automatically. It can be cash, check, or on credit. Receive. Receive means receipts. Receipts always there. Debit. When I say receive, what comes into your mind? cash come into your mind or check come into your mind? Because either we are receiving cash or we are receiving check. Receive cash from XYZ. Debit cash, credit XYZ. Paid cash to suppliers. Paid. What comes into your mind? Credit. Credit cash, debit suppliers. So, once the concept of double entry is known, if you become a master in the concept of double entry, then it becomes very easy to go to study the second part of it, what we call the ledger accounts. So all these transactions, whether they are cash transaction, credit transaction, or bank transaction, they will have to be recorded in the ledger. The ledger where we are going to record the debit and the credit entry of the account. For example, purchase goods for cash $4,000. So in this case, we debit purchases, credit cash. So what are the two accounts involved? Purchases and cash. So we have to open these two accounts in the ledger. We open purchases account and cash account. So we say debit purchases. On the debit side of the purchases account, we have to write down the name of the other account, cash. So in the purchases account, on the debit side, we will write down cash and the amount. And then we open the cash account. In the cash account, on the credit side, we will write down purchases and the amount given. Very easy. Once the double entry is known, then we can record it in the ledger. Purchase building for cash. Debit building, credit cash. So what are the two accounts involved? Building account and cash account. So in this case, we have to open building account and cash account. But if we do have cash account, no need to open cash account. If you have enough space in the cash account, we can record it in the cash account itself. No need to open other cash account. So purchase building for cash. Debit building, credit cash. Therefore, we have to open building account. In the building account, on the debit side, we will write down cash, and then we open cash account. On the credit side of the cash account, we will write down building. So now, let us see an example of a ledger. So here we are. Purchase motor van for cash $10,000. Purchase motor van for cash $10,000. So in this case, we have to open the two accounts, motor van account and cash account. So motor van account, we say purchase motor van, we debit motor van and credit cash. Debit motor van, credit cash. So in the motor van account on the debit side, then we write down the date, and then we have to write down cash instead of writing motor van, cash, and then this bill. And then we open the cash account. On the credit side of the cash account, because we say cash account will have to be credited, credit cash. On the credit side of the cash account, we write down January 1, we write down the name of the other account, motor van, this bill. Now, let us see a second example. Purchase or sold motor van January 2, sold motor van for cash $4,000. So what are the two accounts involved? Debit, credit. What are the two accounts involved? We have sold motor van, credit motor van, debit, cash account. So these two accounts are involved, cash account and motor van. But we do have cash account, no need to open cash account. Okay? And we have motor van account, no need to open motor van account, then we can record it. Debit cash. So the cash account will have to be debited. On the debit of the cash account, we write down the date, and then we write down the name of the other account, motor van. How much? $4,000. And then we open the cash, the motor van account, credit motor van. On the credit side of the motor van account, we write down the date, and then cash $4,000. So we do have motor van account and we have cash account. No need to open other cash account or motor van account. We just record it in the motor van account given and cash account given. So, paid wages by cash. Paid wages by cash. Paid. What comes into your mind? Paid wages by cash. Credit cash, debit wages. So we do have cash account, we just have to open wages account. Wages account. Pay wages by cash means debit wages, credit cash. So in the cash account, on the credit side, we write down the date, and then we write down wages. Let's say 5,000. Okay, and then we open wages account. On the debit side of the wages account, we write down the date, January 3. We write down cash, $5,000. Okay. So this, the ledger will have to be recorded in this way. Very easy. Once the double entry is known, then you can prepare your ledger accounts for each transaction, for each motor van account, bank account, and so on. Then you record it in the same way. Once you know the account to be debited and the account to be credited. So where we are now, so far concerning double entry, what accounts to be debited and the accounts to be credited. So whatever comes into the business, we have to debit, and whatever goes out from the business, we have to credit. So once this process is completed, then we go to record it in the ledger accounts. In the ledger accounts, what we have to do, if you have to debit an account, no need to write down the name of the same account in its account. You have to write down the name of the other account. So it will go like this: debit purchases, credit cash. So in the purchases account, we write down cash on the debit side, and in the cash account on the credit side, we'll write down purchases. So here we are, so far concerning the concept of double entry. Now you can work out in your textbook, you can see there are a lot of questions on the concept of double entry. You just learn now how to do the double entry. You just write down the account to be debited and the account to be credited. And then in the next step, you can open your ledger accounts. You record the transaction. Yes, thank you very much for your attention. We will come back to see you again in the same topic. We will continue with ledger accounts, where we have to close the accounts by balance CD and balance BD, and then we'll see the trial balance and so on. So for the time being, just concentrate, focus your attention on the concept of double entry. Thank you very much.